Assalamualaikum everyone. One more issue on leverage funding, and this is about the Riba depositors killing or slaying Riba banks. This is what we saw in the American bank that went into receivership. Silicon Valley Bank, Signature Bank, and First Republic, and now Pac Bank is the latest victim. We do not know what will happen next to the bank, but the stock prices have gone down by almost 40%. And so this is what we do not want to see happening to the Islamic bank, because the process of banking closure, the process of bankruptcies in the American regional bank, is caused by the disconnectivity between the depositors and the bank and the borrowing party. So there is no harmony or connectivity between the stakeholders. They are only friends and companions during good times, but when any of these stakeholders are in trouble, then they become enemies, and there is no empathy or sympathy to save each other from eventual bankruptcy or eventual destruction of wealth. So we do not want to see the Islamic bank to fall into the same position. So the evils of riba struck again on American bank in 2023 after the subprime crisis of 2008. Silicon Valley Bank, Signature Bank, First Republic, and now we see the latest bank, that is Pac West, in trouble. We do not know what's going to happen to the bank, but the stock price has gone down to almost 40%, and there's a likelihood that that will be the next bank to go under. And we can see that throughout March this year, sadly, the US bank market capitalization was down by $275 billion. So we now see the full action of the riba system destroying the wealth of the American people. So the riba system should not just be viewed from the product offering only. We need to see it from a cohesive system whereby the support system will be visible when the stakeholders are strong and able to fulfill their obligation. But once the stakeholders or the depositors, the borrowers, the bank are not able to fulfill their obligation, then the system will go against each other and sadly ending up the bank into bankruptcy. So people who consume riba on the funding side, that is the depositor, they are, as I said, they are disconnected from the people who take loans from the bank. So depositors' funds are locked into, for example, deposit funds are locked into longer illiquid home loans. This is dangerous, but the depositor don't care. They don't care whether the bank will have problem selling off this illiquid asset at a loss, in the event of heavy withdrawal. But what the depositor want to see is to get their money back in full plus interest. Now the depositors too have no business relationship with the bank other than their deposit money. So the depositors are free to pull out their funds, even if this means triggering a bank run and bank closure. So in the riba deposit contract, in current account, saving account, fixed deposit, it allows depositors to withdraw their money anytime at any amount. So for example, Silicon Valley Bank lost more than 120 billions of deposit within days. First Republic more than $100 billion within days. So these are deposits that would withdrawn in droves, and these are not just simple working class deposits. These are $1 billion deposits. So having so much deposit in their coffers, a bank must have enough liquidity at all time to redeem the withdrawals of deposit. Like what we see in Silicon Valley and Signature Bank and First Republic, the failure of which will trigger a bank run. So in most cases, a run on the bank will put the bank into bankruptcy. Dangerous, but depositors don't care at all. All they care is the safety of their money. Thus, during the 10 years of the low interest rate in the US, the US bank got greedy to load up their balance sheet with government's treasury and bonds. And we know that the value of the bonds are not marked to the market, until when the bonds mature to be redeemed. So the trouble will come only when the banks are forced to sell this bond at a loss to pay for the deposit withdrawals, just like we saw in Silicon Valley Bank. So the Riba depositors don't care less about the bank getting into bankruptcy when these banks suffer losses in their bond sales. So in the end, what we see is that the Riba is a dog-eat-dog system. There is no sense of mutual cooperation and support among the stakeholders, when there's a crisis besieging the banking system. The weak will be eaten up by the strong. And this is what we fear when the Islamic bank is converging into conventional banking by virtue of their product offering and so on. If they are comfortable in that sense, then we are very worried that when there is a crisis in the Islamic bank, the stakeholders will turn against each other, as what we saw happening in the American bank. And this is not what Islam aspires us to do. Islam and Al-Bay', for example, we support, or we are based on the spirit of cooperation and mutual help. And if the Islamic bank end up behaving like the conventional bank, like what we saw in the American bank, where depositors are selfish and the banks went into bankruptcy because they couldn't pay up the withdrawals, and the weaker bank are being bought over by the stronger bank. So this cannibalization of the weaker bank by the stronger bank, this is what is wrong with the riba system, and that is why we want to stay away from the riba system and opted for the Quranic prescription of al-bay' over riba, inshallah. So I see you again, guys. Assalamualaikum warahmatullah.